Welcome to Markets Now. I'm Michelle Rook with Rich Nelson of Allendale, and mixed closes in both corn and livestock futures trade on Wednesday. And Rich, let's talk about corn and soybeans showing some resilience after some early weakness. So talk about what's driving that. Is it technical buying here because we've kind of held some support areas, or is this really all this demand that we're seeing surface?
I do think that there's valid reasons, especially on the corn side, to maybe suggest that the market has kind of reined back some of its demand concern. We've got 6 weeks in a row now of good corn for ethanol numbers, which are running ahead of USDA's current goal. We also have these export sales, which so far continue to pile in. In fact, it's not just last week's sales, which are good. This week's sales are going to be quite strong for corn and soybeans. So, in the short term, we do have good export sales, good short-term demand-based discussions, but I think a lot of us will note there's still some questions about these future sales after the elections here.
Okay, so let's talk about that because there has been a lot of flash sales here, as you mentioned. And so, how much of this is front loading by some of these end users or export customers that are uncertain about what might happen after the election with tariffs?
And I think that's a very big question here for us. And maybe not a big issue on the corn side or wheat side, where sales to China are relatively low in the past year. The question for us certainly is about soybeans, and this big question as far as risk needed is really something which is troubling. Keep in mind, in the past 2 years, soybean export sales were eventually revised down by 125 million bushels, 175 million bushels. The trade keeps that in mind. Plus, we have seen Brazil move to now a cheaper export bid. So I think there's still questions on the soybean side, especially.
All right, so you talk about that export risk in soybeans, and it really comes from two different areas. One, South America is getting rain, so that's part of it. China is the other part in their economy, or not?
I think the China economy issue is kind of actually a minor issue. I'm more concerned about this issue with the fact that, like you mentioned, Brazil's and Argentina are set for getting rains. No argument there. Brazil's currency, in fact, we're at today's close for the Brazilian real is going to be the fourth highest close ever. So this discussion about depreciating real, which does hurt us on the export side, that's another issue. On top of that, Mississippi River is going to be dropping back down to minus 9.7 stage feet, stage height by the early November. So a little concern on a lot of different areas, especially for the soybean side.
So we know it's been a really fast harvest. What's going on with cash basis levels?
No, on one thing for the soybean side, we have actually seen, and this is probably more related to the fact we've had that recent sharp drop in futures, but at least on the soybean basis, we have rebounded about 12 cents here from the main lows, which are posted back in September. And typically, there's about another 14 cents still ahead of us into mid-December. On the corn side, as we didn't have as sharp of a break in terms of price, we're still holding near those current fall lows. We've only come off those fall lows maybe by about 3 to 5 cents. Keep in mind, on the positive side, even in heavy supply years, corn does have about 16 more cents on basis appreciation going into December.
So some of the trade that we saw on Wednesday, was there some money flow or outside market influence as well?
I do think so. And as far as that goes, there's a lot of questions about, for instance, China's financial support to its domestic markets. That's a big question for us about the various packages coming out of their central bank. So at this point, we can argue that there are some outside money influences, and certainly for us on the U.S. side, with a lot of questions about this recession story. Maybe later on this year, I should say, or maybe at some point in 2025. That's still an issue right now.
So let's talk about technicals. What are the resistance areas, especially on corn and soybeans, that you're watching that we have to get above here? And what's going on with the fund community right now? Are they flat? Are they staying on the sidelines?
As far as the chart side of things, on the corn side, I don't have really any real resistance for about another 12 cents or so. For the soybean side of things, we can argue in this case about the same type of story. So we don't have a good short-term chart point that we need to pop up of, and we can quote unquote turn into a bull market. I do think on the fund side, which you just mentioned, is really important to point out. Keep in mind, for all these markets, the last 2 weeks, the market's reaction to fund buying or selling has actually been negative. So even if funds did have a week or two of buying, the market actually ended lower. So a little concerned right now about the fact that for the past 2 weeks, the market has not been interested in fund buying or responding to fund buying. So maybe that'll be a change of heart maybe by the end of this month here.
Yeah. So the wheat market did try to follow corn and soybeans here today, but we've been struggling a little bit with that market. Talk about why we're struggling. Is it just because we're still not competitive from an export standpoint with Russia?
That's certainly the issue. Our hopes are for higher prices on the wheat side are all long-term hopes. It's true that we do have three or four major northern hemisphere producers planting in dry conditions right now. That's true. The summer 2025 harvest discussion is a question, but it's too early to really have a major concern about that yet. Winter wheat yields are not made at planting or even during winter. They're made with spring rains. And on top of that, we're still waiting for Russia to drop off in this short term old crop export sales movement. So far, July through September, their exports are actually running even with last year. USDA expects them to end of the year down 7.5. So at some point, there is going to be a quick, sharp drop in Russia and Ukraine's export trade here. Maybe it's 2 months away. That's the question here.
What about the cattle market? New highs for the move early in the session. And then did we just hit resistance, or the stock market being down? I'm sure didn't help, but I know you think this McDonald story was part of it.
I think so for today's discussion, at least. Now, realistically, these E. coli and food scares, historically, they mean almost nothing for any lasting change to U.S. consumer movements as far as meat consumption. So it's not a long term issue, but maybe for today's discussion. And the simple fact is, McDonald's did come out after 11 o'clock this morning, and they did confirm they still have not yet narrowed it down to just either onions, which is the current speculation, but they also have not ruled out beef yet either. So maybe a small amount of demand hit for today's discussion. Overall, though, this cattle market is still holding a quite strong uptrend.
No doubt. So do you think we can get above resistance levels here, at least psychologically? The December live cattle contract, it seems like 190 is the logical barrier there.
It certainly is. And there's a lot of chart points directly above here within this next dollar higher from here. So, as far as the charts, that's a good question. If we didn't have any beef demand concerns, we should be pricing, in our view, December live cattle futures at 193. So, you mentioned, can we get to 190 or can we get to 191? Maybe. But I do think there's going to be some resistance towards prices past that point, though. Keep in mind here, this demand discussion is still valid in the trade's mind in that very short term, though.
Yeah, and some of it does has to have to do with what cash does. We've been up 6 weeks in a row here. Do you think we're going to keep grinding higher?
I think we have maybe one more week possible left of higher cash trades. We picked up about $3 to $5 over the past 4 weeks, so good news there. But keep in mind, a lot of this is also due to the fact that packers have been cutting kills. This week will be the fourth week in a row of intentional kill cuts. So yes, it is true that cash cattle is seeing slightly higher trade, but that's simply due to the fact that wholesale beef has had extraordinary gains. $28 over the past 19 days. So, as far as how long this lasts, maybe we have another week left here.
Yeah. And then we do have this cattle on feed report coming up on Friday. So do you anticipate a little caution going into that, even though placements are expected to be lower?
They're expected to be dropping about 4% versus last year for September placements. Um, really, as far as this goes, I don't know if this report's really changed too much. We kind of have a really solid stories in place since January. January through September placements will run about 2% lower than last year overall. And yes, 4% is what the trade expects for this cut for September by itself. But the story is we'll have a very light, slow decline into second quarter of next year. I don't think there's big arguments just yet on the supply issue being a big bull story here until maybe the second half of the year.
And hogs, you and I have talked about this before. New highs for the move again today. And this market has had a big contra seasonal move, I should say. Is it all fun buying at this point, do you think?
I do think there's a valid reason for this hog market. Keep in mind, typically this is a bear time of year for cash hogs and cash pork. Typically, we're rising in supply seasonally all the way into late November, early December. What I got to find really interesting though is this run though, this market constantly reevaluates what type of discount is needed for December and February. And one big driver is the simple fact that supply has not been showing up. 6 weeks in a row here of smaller expected hog kill, roughly 1% smaller than last year. That Hogs and Pigs report just late September said we should be running about 3% over last year for hog numbers. So how long this surprise in supply lasts is certainly our main question for us right now.
So you think it's mostly about supply? Maybe USDA got the reports wrong. It's not necessarily about better demand than we thought.
That is correct. I am not putting this on a van argument. I'm putting this mainly on our surprises for supply, which instead of just 1 or 2 weeks for a little bump, have lasted 6 weeks. So now we have to question USDA's whole September hogs and pigs report.
All right. Thanks for that analysis. As always, Rich Nelson with Allendale, and that is Markets Now.